Hey everyone, we have Liz Lopez on. She is a broker and specialist with these DSCR loans, and she has so many different unique products that she has to offer us. I really wanted to bring her on just because I have not found anybody in this business that has been as knowledgeable and has so much to offer. So, Liz, welcome aboard.
Thank you so much for having me. I love this.
Yeah, so before we get into what I brought you on for, let's talk about you, your experience in the business, and go from there.
Yeah, so I've been in the mortgage business for 19 years. I started as a loan officer a long time ago before there were even licensing laws. Got into the retail, so I was an underwriter for 12 years after that, a government and conventional underwriter. From there, I went on to be a branch manager at Fairway. And then after I left Fairway, I came back to being a licensed loan officer. I'm a mortgage broker and I specialize in the DSCR loan product. I'm an investor myself, so I've been doing that since 2018. I have virtually fixed and flipped some homes. I've had some long-term rentals and I've had a short-term rental. And I'm in a couple of the different mentorships. So the Pace Morby Sub 2 community and Justin Colby's The Science of Flipping. So I love to work with investors. I love working with this loan product. DSCR is 90% of my business and I consistently have about 40 of these going in the pipeline.
Awesome. And where are you branched out of? Where are you located?
I'm in Scottsdale, Arizona.
Oh, so nice. And do
Love
you
it.
work in all the states?
Yes, I can do DSCR nationwide.
Awesome. So what I really wanted to bring you on here for, because we run across this so much in the area I am, what do you have under a $75,000 loan amount for a DSCR loan?
One lender. So I have over 80 of these DSCR lenders. I find new lenders all the time. I love finding new lenders because something that people don't realize, every one of these DSCR lenders has a different set of guidelines, different minimum loan amount, different minimum credit score, the DSCR ratio. I mean, so many different guidelines. But I've got one lender. It's United Wholesale Mortgage. They're the largest wholesale lender here in the US, and they can do all these DSCR loans under 75,000. Once we hit 75,000 and above, now I've got some other lenders that we can go to. So UWM in itself has a couple of caveats. So they will allow you to close in an LLC, but they won't allow a layered or nested LLC. So if your LLC is owned by another LLC or it's owned by a trust, that would be an issue getting that through with UWM. We'd have to either close in your personal name or close in an LLC that is not owned by another LLC. They also report that DSCR loan to your personal credit report. So half of my lenders report the loan, half of them don't report to your credit report. So if somebody goes to pull your credit, they will see that DSCR loan. But for, little loan amounts like that, it doesn't really make too much of a difference. And you can usually offset the payment by showing them the lease agreement.
Awesome. So what are some of the other things to look for when we're looking at that lending product? Like fees, I'm sure fees are a lot higher. Like it's eating up the loan cost, right? Or the entry fee. So what are we looking at like fees for a product like that?
So my origination fee, I'm capped at 2.75%, and I do charge that on those loan amounts. So you got a $50,000 loan amount. My fee is going to be just shy of a 1,500. So it's not a lot, but it's what I'm capped at. Then we're going to have an underwriting fee. UWM's underwriting fee is about $1,200. You're going to have your title fees. So that'll depend on your title company. The appraisal and the credit report will be paid up front. And then if you'd like to have your taxes and insurance included in your payment, we're going to have to establish an escrow account. So that's not a fee, but will be some money that you're going to have to put out to hold in an escrow.
Right, definitely. And you did mention earlier in like this loan that some of the requirements can't be in a nested or layered LLC, so can't be owned by another LLC. Now, can people, and this is probably not something
With
you can really answer
UWM,
with UWM. That was just with this low amount loan. Yeah, the 75,000 under. And you said
there's
what did they?
many lenders. Yeah,
Yeah, what did they go? What did you go? What did they go down to? Is that $50,000? Is that what you
no
said?
minimum loan amount.
No minimum loan amount. That's crazy.
Yeah.
So really, you're almost doing some of these loans for essentially free if somebody's taking out a really low loan amount with your.
Yeah. I mean, I have an assistant also, and she gets a third of my income, and I do not charge a processing fee. So yeah, I mean, some of these loans I'm only making a few $100s, but to me, I'm not a transactional lender. I'm a relationship lender. So I'd rather do the loan. I did a loan for a gentleman last year. It's 40,000. He tags me all over Facebook if he sees somebody needs a DSCR loan. So I mean, I've gotten so many referrals from that. So I'm not just here to just make, there's a lot of loan officers who won't do these loans because
Yeah.
if they're under 100,000, they're not going to make a lot of money. I'm not that type of lender.
Awesome. So that is good to know. Let's talk about some of these other products you have because it does loosen up a bit as far as who you can go to once you go what close to $100,000 or over, right?
Yeah, 75,000. That's
75,000.
correct. Once you hit
Okay.
75,000, I've got lenders that'll allow things testing. I also have lenders that won't report your personal credit report. So we also have credits. So they all have a different FICO requirement. There is a misconception out there in the community that with DSCR, we don't pull credit. That is incorrect. All of my lenders require a hard credit pull. There's a couple that will do a soft pull, but it's still a recourse loan. So everybody thinks these are non-recourse loans. That is not correct. Even if they're not reporting the loan to your credit report, if you are delinquent, seriously delinquent, eventually they will come after you. We are personally guaranteeing these loans.
Yeah, I think that's something a lot of people don't realize in the DSCR world. This is still a personally guaranteed loan. It's not like, oh, I default and I'm fine. Yeah, they're coming after you.
Mhm.
All right. So I don't
People
know if
think
we
that, we're doing it. Yeah.
go ahead.
I was gonna say a lot of people think that we can close the loans in their EIN and their paydex score. That's not correct. We're gonna use your social security number and we will be doing a hard credit pull on you.
Yeah, and we might have touched on this a little bit earlier, but let's go into more of these products that you have for the more creative loans. Like if somebody's trying to do a pad split, how do they really qualify for a DSCR loan? Because that's kind of the hot thing for co-living right now. So,
Yeah, so pad split, a lot of my lenders don't even know what pad split is. However, I do have one lender that if you've been running that model for the last 12 months, they can lend on that because you have experience, you have the 12-month history of doing it. And I have another lender that is willing to consider it on a purchase as long as you're an experienced investor. Because it is new, they are limiting the LTV. I believe it's 70% loan to value on that one for purchase versus normally it would be 80. So, they're a little bit higher risk. The lenders aren't really too sure about them yet, but we can definitely get them done. And pad split means you're pretty much renting by the room.
yeah.
And it's not long-term renting. It's more of a short-term renting by the room.
Yeah, you're practically turning your house into a small hotel, like with weekly rentals. So, yeah, there's no
Yeah,
lease agreements, and that's what
pretty
makes it
much.
really hard to lend on. There is no lease agreement. So,
Mhm. Correct.
um, yeah, so that's one creative strategy that most people don't or just can't lend on. What else do you see out there that you have a product that
Mhm.
covers that isn't really found many other places?
So I do have one product. Sorry, I had something pop up on my computer. 10% down. So that lender, it's a DSCR loan. That lender will lend 50 to 75% on the first lien. You bring 10% down and they'll allow a seller second. So the seller can cover the gap.
Okay, so you said 50% down? Is that what?
50 to 75,
Okay.
they'll lend on the first lien.
So
Yep.
they'll
They
do like
got
a
two different
yeah.
products.
So like a 50-40-10. So you're bringing 10% in closing costs, and now you can actually openly talk to the lender about that second position. There's
Correct.
no gray areas you're hitting. This is all on above the board. So
Yes, and it is called the 50-40-10. They actually call
yes,
it that. So yes,
awesome.
that's correct. So, in the sub two community, everybody's always constantly coming to me asking me about the Morby method. And the basic gist of it is that, you're getting your seller involved to help pay for your down payment. So the seller, you're either putting a second lien on after closing or the seller's becoming part of your LLC. We don't allow that in the mortgage business. We don't allow silent seconds or the seller to be covering your down payment. But this one lender will legitimately allow that seller second.
Yeah. So I mean, when it comes up to that, you said that it has to be at 50% is the minimum, but you can go all up to 70%, 75%, whatever that was. Do the rates vary then?
75.
75. Do the rates
Yep.
vary? They get a little bit higher if
No,
they're
typically the rate is going to be this. Yeah, it is higher. So that rate is basically about 9.24 and it doesn't change very often.
okay.
Unfortunately, it's a higher rate. But when you think about having a blended interest rate, if you could talk seller into a low rate on that second, and then you have a good blended interest rate.
Right. You're like, hey, Mr. Seller, I can get you 60% of your money up front right now. But you have to work with me here on the back end.
Mm-hmm.
So yeah, it's a great product to have, and you don't have to hide anything. You could be above board. And we can touch a little bit on the Morbies and the reasons that so many people are, trying to do these and they're not above board. So a lot of people try to put the seller into their LLC. And that's a no-go right off the bat. Can you talk about why that is not a possibility?
Well, the seller can't be the seller and the buyer.
Yes.
So if they're part of the LLC, they're playing both fields there. It's a fraudulent type of a loan. And if you have a good underwriter, they will be digging into that LLC. And some of these lenders do full LLC entity reviews where it goes way beyond the underwriter. That's not gonna, they're not gonna catch that. But some of, operating agreements, which shows the ownership of those LLCs, they're not recorded. They could be changed at any time.
Hmm.
So I'm assuming that some of the buyers might change it after closing. What I don't know can't hurt me. So I don't want to know about that kind of stuff.
Yep. I gotcha. And then another thing that people really do screw up on this, or I'm sure you've seen the problem with this, is those sellers' funds, the funds that you still have to close that first transaction out. 100% of the money has to be there, and it can't be just the seller carrying it back. Where's that
Right.
money coming from? People think that that's just the seller can carry it back. Can you
We
explain
do
why you
require,
can't? Yeah.
yeah, because number one, we're going to require for the most part 20% down. There are a couple DSCR lenders that offer 15% down, but the rate's about 2% higher. So we will need to see where the money's coming from. We're going to
Yeah.
require your bank statement. So if you have no money in the bank, you're not going to get this loan. However, I'm assuming that a lot of those buyers will show us the bank statement, show they have enough funds, but then they're actually getting the funds from somewhere else.
Right. And
So
that's
you,
another,
yeah,
you just don't tell me this kind of stuff, right? Yeah,
exactly. Yeah. I
definitely.
don't want to know I'm a licensed loan officer. I don't want to be doing anything. Definitely don't want to be doing anything fraudulent. I mean, because you guys are going to have to provide bank statements, and some of these lenders, if there's large deposits, they're going to want to source and season where the funds are coming from. There are some of these lenders that are a little more laxed, and as long as the money's in your bank before closing, we're okay.
All right. So say somebody's getting into a partnership now, right? We got two people involved, whether it's just somebody who's doing the operation, somebody's bringing the money. Is there a percentage of the LLC that person, either one of those people have to own in order to have those funds count?
So that's going to depend on the lender too. Some of these lenders require all members of the LLC to be on the loan. Some of these lenders, as long as you're 25% or more owner, they're okay with one person being on the loan. And then also, some of these lenders, if you have somebody who's 25% or more owner, they could be your private money lender or the money lender for this loan, and they don't even have to be on the loan. Just if they're in the LLC and they have 25% ownership, the money can come from their account.
Okay, yeah. So many different options because so many people, especially in our community, are squatting up, are, getting into partnerships, some good, some bad. And it's not your job to vet out the partnership, but you just have to make sure everything's above board as far as who owns what in the LLC. Yeah. And it seems
And that the
like,
lender's okay with that.
yeah, it
Yep.
seems like from what I'm understanding is what's really great is how much knowledge you have. You can get people ahead of a lot of these things because you know what all of these different lenders looking. Yes, guidelines change and what they're looking for changes, but you can
Mhm.
sniff out a lot of things that people are going to have problems with down the road.
Yeah, as a loan officer, you definitely need to do your due diligence and ask a lot of questions to make sure you're not sending clients to the wrong place. I have a spreadsheet with over 80 of my lenders on here, all different tabs, because there are so many different guideline variances. That some of the stuff I didn't touch on. If you're doing a cash out refinance, there's a seasoning requirement. Some lenders are at 3 months, some are at 6, some are at 12. If you say you renovated the home and then you put it on the MLS, you can't sell it. Now you want to come to me to do refi. Some of these lenders require 6 months off the MLS before they'll allow the refinance. Some of them are one day. So, when I meet a new lender, I interview them and I go through this spreadsheet and I just take down all their information so I have it on there. And then when I have a client call, if I get an inquiry, I have a little form that people fill out. It's a short form. That's going to also tell me a little more information of what they're looking for so that I can get correct pricing.
Yeah, that's so helpful. And I mean, me personally, I have not used you, but I have used DSCR lenders, and so many things have came down the road that they're like, we need this, we need this, we need this. And a good mortgage broker can get ahead of so many of those things because they know what each one of their lenders needs.
Yes, absolutely. And my underwriting background too, there's a lot of times, especially with UWM, because they hire a lot of new underwriters, there's a lot of times where they condition for stuff that they shouldn't be conditioning for. So it's the job of the loan officer to make sure they're looking at those approvals. Yes, they usually have a processor or somebody else doing it too, but loan officers need to look at that also. Underwriters are not always correct.
Yeah. So you have the ability to challenge somebody when a new mortgage broker is not going to have that knowledge.
I challenge things often, and often I get them overturned.
Awesome. So, Liz, if anybody wanted to talk to you about any of these different DSCR products, and if you have a unique strategy or product that somebody can be used, how would they contact you?
I would say reach out, either text me or reach out on Facebook. I am most active on Facebook. I'm on all the social media, but I've got a lot of YouTube videos on Facebook. I talk about DSCR loans a lot. But my number is 602-410-0995. I would say text me, send me a message on Facebook. I like to set up a client call. The client call is usually 30 minutes just to get to know you and just see what your objectives are. And then I've got that pricing form. So anytime my investors want pricing, they just fill out that DSCR pricing link. It goes right into my inbox and I have pricing within 24 hours.
Awesome. So I will put your number, I'll put all that in the description of the video so people have easy access to it.
Okay,
So
that'd be
before
awesome.
before I let you go, I know you're busy, you're working all the time, but sometimes you want to relax and watch, a podcast or something. Is there a podcast or YouTube channel, whether it's real estate or non-real estate related, that you really enjoy?
I'm big into health and fitness. That's really my passion. Anytime I'm not here, I'm always at the gym in the morning. I have two kids also, so between the gym, my job, my kids, I watch a lot of health and fitness type of stuff. I'll be 50 this year, so I also, just aging. I like to watch videos on women that are aging and just to age gracefully and get the most out of being healthy and yeah, I don't know if I have a specific person in mind. I just scroll through YouTube and I don't know. It seems like that stuff's always popping up, probably because of those algorithms, right?
Yeah, it's shooting you whatever you want. You're telling it what you want. So awesome. Well, is there
Mhm.
anything you want to leave my audience before we cut this off?
Um, let's just see if there's anything I didn't really talk about. We can do rural properties, manufactured homes, condos, 1 to 4 units or 5 and above. We can do unlimited units on the DSCR loan. There's mixed use DSCRs. Foreign nationals can get a DSCR loan. If you're a first-time home buyer, first-time investor, you can get a DSCR loan. Not all lenders allow it, but there are some lenders that allow that.
Awesome.
Few things with DSCR that are different than conventional. They do come with prepayment penalties. So you're always going to be priced normally with a 3 or 5 year prepay. You can always ask your loan officer for a 1 year prepayment penalty. Some of the lenders will allow you to buy out the prepay altogether, but that is something to be aware of. You do require reserves, just like on a conventional loan. You're going to need reserves also for the DSCR investment property loan. It is only for investment properties, and reserves are typically going to be either 3 or 6 months of your payments, and they just need to see it in the bank somewhere. If you are doing a cash out refi, though, a lot of lenders will let you use the cash out proceeds for your reserves.
Awesome. All right, that's something I did not know. Well, Liz, thank you so much for coming on. There's just a wealth of knowledge that you just brought to all of us.
You're welcome, Paul. Thanks for having me.